Hello, I'm Dan Ridsdale, Head of TMT at Edison, and today I'm joined by Ben Crawford, Chief Executive of CentralNic. Ben, you've just released your Q1 results. Many thanks for joining us today, but looking at the overall progress over the last 5 years, you've delivered a compound average growth rate of 78% through a combination of both organic growth and M&A. Can you discuss how you've achieved this and the level of growth that you think is sustainable in the future?
Sure, absolutely. I mean, the main driver of growth for us has been M&A. We're in a fragmented industry where 20 years ago, companies popped up all around the world to help their local businesses get online. They all have essentially the same business model, the same really attractive recurring revenue model and high cash conversion. So the main driver of our growth has been to pull together as many of those as we can, of the best ones, into a single group. But also over the past 12 months, we've been very focused on driving up our organic growth rates as well, which as you've seen, has been very effective.
Yes, so your Q1 update that highlighted 16% growth across the group. How evenly spread was that across the group, and across the different business segments?
Very evenly, in fact. We split our business into 3 reporting segments. So the indirect segment is where we're supplying retailers all over the world with domain names and value-added services to sell through to end users, and that enjoyed a 13% organic growth rate during the course of the year. Our direct channels is where we sell domain names direct to the 3 kind of core groups that buy them. Small businesses, enterprise customers, and domain name investors, and that too enjoyed a 13% organic growth rate. But then the star of the show was our online marketing segment, which essentially connects together website owners with a marketing budget to spend to acquire new customers together, on the one hand, with, on the other hand, websites or technology companies that have traffic that are seeking to monetize that traffic, and that part of our business, online marketing, grew at 19%.
Great, thanks. And you've described 2020 as a year of investment in both staff and systems and strengthening your senior management. What tangible returns has that delivered in terms of the group as a whole?
Well, quite considerable ones, really. I mean, our organic growth historically had been around 6%, so we really managed to do way better than we had historically, and part of that has come from the restructuring. We created a much more substantial mothership of back office functions, so that all the companies that we'd acquired essentially could then rely on a back office team to handle things like finance, HR, project management, with shared software tools, everything from Salesforce and Zendesk to Google Suite. And then we also grouped our businesses together into divisions and put new commercial heads on top of those divisions with the sole real focus of driving organic growth. And so that restructure and that new hiring and resourcing has proven to be very successful. I would say it's one of the key reasons that we have improved our organic growth rates.
Great, thank you. And you've renamed monetization, so the Team Internet business, essentially, I guess you've renamed that to online marketing. Can you discuss what that renaming, that repositioning means for the business?
Absolutely. So initially, the first company we bought in this space, Team Internet, its main business was what's called domain name monetization. So this is when a company has no use for its domain name anymore. So often, say if the company goes out of business, then a domain name investor will acquire that domain name. And one of the great properties of domains is they continue to drive traffic. So there are still links all over the internet to the old website. There's it's sitting in people's bookmarks. Customers who remember it continue to go there. And so that domain name essentially still got customers going there looking for what they used to buy there. And that traffic can be sold or monetized in order to allow other companies who are in the same business as the website that's now defunct to actually get access to those customers, which is obviously gold for them. It's a fantastic service and able to drive really good return on investment for them. So that was our original business, very associated with domain names, simply a second revenue stream you could obtain from domain names. But as that business has grown, and it's grown very substantially over the course of our ownership of the company, plus we've made a couple of other acquisitions around it, we realized that not only are we monetizing all different kinds of traffic now, website traffic, search traffic, not only domain name traffic, but we also are very substantially involved in the other side of the picture, and that is providing the service to people who've bought a domain name, built a website, starting to sell something on that website, and now have to spend their marketing dollars to bring new customers to that website. We can also provide them with this service of buying the traffic as well. So we feel like online marketing is a much better describer for the entire kind of ecosystem that we're enabling.
Great. So you're a global leader in domain names. I think you touched 45 million domains globally, 12% of the global total. So what makes the group? How do you plan on leveraging that market leading position to I guess increase margins, drive increased profitability, and so on?
Well, I guess the key thing is that nobody really just buys a domain name for the fun of owning one domain name. Everyone that wants a domain name wants some other services to go with that domain name. And historically, as we've been a pure play domain name company for many years, they've had to go elsewhere to buy those other services. So for instance, if they're a small business, they want to get a website, they want to get email software, they want to they need to get their website hosted, they might need e-commerce software, SSL certificates and other cybersecurity measures to protect their website, and they need payments, and then they need online marketing as well. So there's this whole suite of additional products and services, and that's just for small businesses. But enterprise customers have slightly different needs, domain investors different needs, and government different needs again. So our aim is, just as we've added online marketing to domains as another service, we will be adding the whole rest of that product suite: hosting, website building, email software, and so on and so forth. Because essentially these are all products and services bought by our customers. Just historically, they've had to go elsewhere to buy them. So that's very much where we see the future of the company, is continuing to provide domains to all customer segments globally. But now, just as we've added online marketing, which is growing at 19% a year, we plan to add other additional services and grow them at comparable rates. And you will see that a number of those non-domain services actually are higher margin products too. So we do expect margins to increase, not only because we'll be selling higher margin products, but also because of operating leverage, that these are our businesses are platform businesses. So as the volumes grow, as the scale grows, the margins improve as well.
Perfect. Look forward to seeing your progress on that front. Ben, thank you very much for joining us today.
Thank you, Dan. Great talking to you.